Hi everyone and welcome back to Money Experiment PH. Today we are going to talk about leverage. This can be applied everywhere, starting in the stock market, forex market, real estate market, or even running a business. So what is leverage? It is borrowing money from others and using that money in investing or trading. The reason why it is called leverage is actually related to lever itself. It makes you lift heavier objects with less force. Likewise, leverage enables you to buy expensive assets with less money. Buying an expensive house with a home loan is a good example of leverage. You don't have the money to pay the entire price of the house now, so you borrow money from the bank and you buy the house. Good thing about leverage is that when the investment or the trading with leverage is successful, your return will be much bigger than what would have been with your original money. So for example, let's compare these two scenarios. Let's assume that there is no interest charge for simplicity's sake. In the first scenario, you are buying a 1 million house with 1 million pesos, which is your own personal money. And in the second scenario, you are buying a 10 million house with 1 million as your personal money and a 9 million bank loan. Let's assume that the real estate market is good and all house prices went up by 10%. How much would you have earned and how much percentage is your return? In the first scenario, you would have earned 100,000 pesos and your return is at 10%. In the second scenario, you would have earned 1 million pesos and your return is at 100%. Do you see the difference? In this illustration, successful investment or trading with leverage is favorable to you as an investor. Now let's see what will happen if the investment goes wrong. First thing, of course, is when the investment or trading with leverage goes wrong, the loss you need to bear is huge. For example, let's assume there is no interest charge for simplicity here. In the first scenario, you are buying a 1 million house with 1 million as your personal money. Again, in the second scenario, you are buying a 10 million house with 1 million as your personal money and a 9 million bank loan. Let's assume that the real estate market is bad and all house prices went down by 10%. How much would you have lost and how much percentage is your return? In the first scenario, you would have lost 100,000 pesos and your return is at negative 10%. In the second scenario, you would have lost 1 million and your return is at negative 100%, which means you lost all the money. Furthermore, it is also possible that you might lose even more money than you initially invested. Similar with previous examples, let's now assume that the real estate market is really bad and all house prices went down by 30%. How much would you have lost and how much percentage is your return? In the first scenario, you would have lost 300,000 pesos and your return is now at negative 30%. In the second scenario, you would have lost 3 million pesos and your return is now at negative 300%. In this case, your house will be valued at 7 million pesos and you still need to pay the bank 9 million pesos more. The second cons of leverage is that interest or financing charge. In all the examples so far, we have been ignoring interest charges, but it is very important, especially home loan rate in the Philippines is extremely high. This is the expense that we need to pay regardless the asset price goes up or down. This factor makes successful investment kind of less exciting and unsuccessful investment more devastating. So for example, when the asset price you purchase went up by 7%, but your interest charge is at 8%, you actually lose money by 1%. If the interest charge was 7%, then it is just break even. If the interest charge was 6%, then your return is at negative 1%. The third disadvantage is that it is very hard to mind control when you see the big losses and start making irrational decisions. Since you use leverage, when the asset price goes down, you will see huge losses. Sometimes it might be several months or even years of your salary. While panicking, people make irrational decisions. This translates to selling at low prices and buying at high prices. A general rule is that you have to invest the amount of money that you are willing to lose without leverage. For example, you have 20,000 pesos that you can live without. That's good money to invest. If you need to use that money, for example, paying for electricity or other utility bills, then you should not invest that money. If you would like to invest or trade more aggressively, I think it is alright to use leverage as long as you know what you are getting into. That's considering how much risk you are willing to bear, what are possible positive outcome and negative outcomes, up to what extent and whether you can pay for the finance charges, and of course what market you are going into. Real estate market is actually suitable for using leverage than the stock market because stock market is very volatile. So in summary, invest only the amount of money you can afford or you are willing to lose or can live without. If you are planning to use leverage, you should always think carefully. Thank you for watching our video and we hope that you enjoy the holidays. If you like this video, hit like and subscribe. See you next time. Bye.